8th April 2026, Zepto's promoters Adit Palicha and Cavalier Vora received summons from ED to produce certain documents related to the company under FEMA, that is Foreign Exchange Management Act. Zepto in its DRHP has clearly mentioned, "We cannot assure you there will not be future inquiries or that these could escalate to investigations, legal proceedings or any possible penalties." The million-dollar question is, should you really invest in Zepto's IPO? Let us start with the real truth. Paytm investors lost nearly 70% of their money in one of India's biggest IPO within 2 years from the listing. Now Zepto is planning to raise around 8,010 crore. Now what is the business model of Zepto? Zepto, as we all know, is a quick commerce company. It promises deliveries of groceries and daily essential items within 10 to 15 minutes. Now how do they do that? They do it through dark stores. Dark stores are small warehouses located inside residential areas. As of FY26, Zepto has around 1100 plus dark stores throughout the country. First, let us start with the positives. Factor number 1, revenue growth. 104% revenue growth is truly exceptional. It grew from 11,1110 crore in FY25 to 22,624 crore in FY26. This is not a company growing at 15% and asking for a premium valuation. The scale is really genuine. Now, Zepto processes around 1.75 million orders every day. Factor number 2, unit economics are improving. This is actually the most important number in the entire DRHP. Zepto's adjusted EBITDA per order has improved from negative 136.15 to negative 78.75 in FY26. Now both numbers are still negative, meaning they are losing money on every order, but the direction of the improvement is meaningful. They are losing roughly 42% less per order than what they were losing 3 years ago. If this trajectory continues, profitability at the order level is definitely possible. Third positive factor, advertising revenue is exploding. Zepto earned 151% more from advertising revenue than last year. That is from 651 crore the previous year to around 1636 crore in FY26. This is money from FMCG brands paying to reach Zepto's users. It is a high margin revenue stream similar to what Amazon earns from its advertising revenue. So there are genuine reasons why this IPO is generating so much of excitement. Now let us move to the part that most of the investors skip entirely. The 4 red flags that you cannot ignore. Red flag number 1, losses are widening and not shrinking. Revenue doubled, no doubt, but losses also widened from 4,700 crore in FY25 to 5,905 crore in FY26. This is the core tension. Zepto is growing fast, but it is spending even faster. The company says this is due to its investment in dark store expansion, customer acquisition, and logistics. The question that investors must ask is, at what point will this expansion end and the profitability begin? Red flag number 2, the regulatory overhang. As I mentioned in the beginning, the ED is examining their overseas investments, shareholding patterns, loans, guarantees, and income tax returns. In India's regulatory environment, FEMA cases usually have a long tail, and this is still not resolved. Red flag number 3, competition is intensifying and not easing. Zepto is fighting 2 well-funded rivals, Blinkit, which is supported by Zomato, and Swiggy's Instamart. Blinkit is already profitable at the EBITDA level, and now even Amazon is entering into the quick commerce space. If you really want to maintain 35 to 40% market share, you'll have to keep spending, and that means losses will not narrow down as the unit economics suggest. Red flag number 4, IPO proceeds may not be enough. Zepto aims to raise 8,010 crore through fresh shares, and there is an offer for sale too. Offer for sale of around 11.35 crore shares by the existing shareholders. What does that mean? It means existing shareholders are exiting and they are selling their shares to you. At the current pace of expansion, Zepto may be required to raise additional capital even after this IPO. Now let us understand 3 classic mistakes that Indian retail investors have made with respect to new age tech IPOs. We will analyze how each one applies to Zepto. Mistake number 1, investing because the brand is familiar. In November 2021, millions of Indian retail investors subscribed for Paytm's IPO. The IPO price was 2,150 per share. On listing date, the price crashed to 1,560 within hours. That's around 27% crash on day 1. Why did people subscribe to Paytm? Paytm was a known brand. Everyone used Paytm. Similarly, now look at Zepto. everyone must have used Zepto at least once to order something. Zepto's brand recognition will really attract Indian retail investors. But remember, it is a marketing advantage and not a financial one. Mistake number 2, ignoring the path to profitability. Here is where the difference lies between Paytm and Zomato, and this is where most of the investors failed. Zomato was listed in July 2021. It was also a loss-making company. But the moment the price touched 116, people started selling it at a profit. But later on, Zomato also turned profitable and the stock went even higher. Why did Zomato succeed whereas Paytm did not? Zomato had a clear, verifiable path to profitability. Food delivery is habitual, order frequency is high. Paytm, on the other hand, was trying to be a super app covering everything: payments, loans, insurance, stockbroking. The complexity meant that there was no single unit economic story. Now, where does Zepto sit between Paytm and Zomato? It is closer to Zomato in model. High frequency, everyday product, improving unit economics. But unlike Zomato, it has competition from Blinkit and Swiggy's Instamart. Zepto has to prove what Blinkit has done, being profitable even after expansion. Mistake number 3, not reading the risk disclosures mentioned in the DRHP. Paytm's DRHP had clear warnings about its regulatory risk in the payment business. Most retail investors never read it. The RBI action on Paytm Payments Bank in 2024 was not something unpredictable. It was already there in the DRHP somewhere. Zepto's DRHP has a live, ongoing FEMA case involving both the co-founders. This is not a reason to automatically avoid the IPO, but it is definitely a reason to size your position accordingly. The question is not whether Zepto is a good business. The question is Zepto a good business at this price, at this stage, with the regulatory overhang? And this is what every investor must face before applying to this IPO. Now the verdict time. Zepto IPO is neither a clear yes nor a clear no. But if you ask my personal opinion, I am not going to subscribe to Zepto's IPO. No doubt it is a genuine, fast-growing business with real revenue, but it is also a business with widening losses and at least 2 well-funded competitors, Blinkit and Swiggy's Instamart, fighting for that market share. The Paytm lesson was, do not invest in hype. The Zomato lesson was, do not dismiss all the loss-making companies. And the Zepto's lesson may be, read the DRHP, understand the competition and invest wisely. Do you think Zepto's IPO will make good money for investors? Would love to hear your comments.